When a bank the size of Bank of America drops its earnings report, it's not just numbers on a page. It's like getting a sneak peek into where the entire U.S. economy is headed. So today, we're going to dig into their huge 2025 numbers and see what they're really telling us about 2026.
So let's start right at the top with the CEO himself, Brian Moynihan. He's basically saying, yeah, there are always risks out there, but we are bullish on the U.S. economy. That's a pretty big statement, right? So the real question is, do the numbers actually back up that confidence? And boom, here's the first number that makes you sit up and listen. $30.5 billion. That's Bank of America's net income for 2025. When you're talking about a number that big, that bullish view starts to make a lot of sense. So how in the world did they pull that off? Let's break it down.
All right, first up, let's look at how they finished the year. These are the big headline numbers that give you the whole picture of what was, well, a really strong 2025.
And wow, the growth was just everywhere. We already saw that massive $30 billion net income. But look at this. Revenue shot up to over $113 billion. Earnings per share, which is what investors really watch, jumped 19%. And get this, in just the final 3 months of the year, they handed back $8.4 billion to shareholders. This isn't just one good metric. It's a sign that the entire machine is firing on all cylinders.
Okay, so those are the kinds of numbers that get Wall Street excited. But what about for the rest of us? What does it mean for Main Street? Let's zoom in on the part of the bank most of us actually use, consumer banking. This is all about how your bank did. This slide right here tells a really interesting story about how American consumers are doing. I mean, look, nearly 700,000 new checking accounts, and that's on top of a 7-year growth streak. People are logging into their apps like crazy, 4.3 billion times in 1 quarter. But here's the real kicker for me. Consumer investment assets are up 16%. Think about that. People aren't just getting by. They're feeling confident enough to save and invest for the future. That's a huge sign of strength. And if you want to see that confidence in action, just look at this chart. People were swiping their cards. Spending on credit and debit cards jumped 6% in the last quarter compared to the year before. That's $255 billion. That increase right there is a direct signal that people were out there buying things. And that spending is what really powers the whole U.S. economy. Okay, so the consumer side looks really solid. Now, let's switch gears and look at the other side of the coin, where the bank manages the really big money. We're talking about their wealth and corporate banking divisions. And just to give you a sense of the scale we're dealing with here, look at this number, $4.8 trillion. That's not a typo. That's the total amount of money they're managing for clients in just their wealth management division. It's just a mind-boggling amount of money, and it shows you how absolutely massive this side of the business really is. So how do they handle all of that? Well, it's kind of like they have 2 giant arms. On one side, you've got global wealth management. That's Merrill and the private bank, helping out wealthy individuals and their families. Then on the other side, you have global banking. They're the ones working with the biggest companies on the planet, helping with everything from giant deals to just managing their day-to-day cash. And both of these arms are absolutely crushing it. The wealth side brought in around 21,000 brand new relationships last year. At the same time, the corporate banking team ranked number 3 in the world for investment banking fees. Oh, and the average amount of money corporations parked with them, that jumped by 13%. So what this tells us is that both the super wealthy and the biggest corporations are trusting Bank of America with more of their business. All right, so it's not just about holding on to money. It's also about moving it around. And that brings us to their other huge profit engine, the trading floor. Let's take a quick peek at how their global markets division is doing. Sales and trading revenue was up a solid 10% in the 4th quarter. That's great. But here's the part that's truly astounding. This was their 15th consecutive quarter of year-over-year growth, 15 quarters in a row. In the super volatile world of global markets, that kind of consistency is almost unheard of. It's a massive sign of strength. Okay, so we've seen strength pretty much everywhere we've looked: consumer, corporate, wealth management, and trading. So now let's zoom back out for one final health check and try to figure out what this all really means as we look ahead to 2026. This table, this really gets to the core of the bank's foundation. On one hand, you have average deposits, that's the money all of us trust them to hold, growing to over $2 trillion.
At the same time, average loans, that's the money they're putting back into the economy, grew by a really healthy 8%. When both deposits and loans are growing like this, it's just the classic sign of a very, very healthy bank.
And the CFO, Alastair Borthwick, he basically confirms that. He's saying, look, we've got plenty of cash, we're well capitalized, our assets are solid. So what's the plan for 2026? It's not about playing defense, it's all offense. He's talking about driving growth, grabbing more market share. This isn't a company just trying to hang on. This is a company planning to expand, and they're doing it from a position of incredible strength. And that brings us right back to where we started. We've seen that regular folks are spending, big companies are investing, and the bank itself is built on a foundation of solid rock. So it really leaves us with this big question. If one of the most important financial institutions in the entire country is this healthy from top to bottom, is that the clearest signal yet that the whole U.S. economy is getting ready for some serious growth in 2026?